Hello traders, this is a technical analysis video for Bitcoin. Before I begin with the subject of today's video, I just want to go over briefly the current price action based off the CPI announcement. CPI numbers were better than expected. I don't know if any of you saw my preparation videos, but if you did, you would have been, I think that you are already in profit and you would have certainly averted a potential loss. Now, what I want to say is that yesterday I talked about it. The first move is always the false move. Okay? CPI numbers were better than expected, but what was the reaction? It was a false move down to the mid-range, and here you have a swing failure pattern, which is your cue to get in. And if you got in on this swing failure pattern, you are currently in profit, and your target should be initial target, let's say 31,000, second target 31,500, and above 31,500 maybe you should consider taking profit in increments. Remember what I told you about taking profits. These sessions are for taking profit, not for holding. Okay, now that's enough with what the CPI. And right now, I would like to talk in one sentence about the DXY, the dollar index. I don't know if you watched my video about what the dollar index means for Bitcoin. If you didn't, I suggest that you do, or go over to TradingView and read the post. But the DXY has been in a descending triangle, and the support level is 139. It looks now that as if the DXY is breaking down from this support, but don't get your hopes up too soon. My guess is that it will deviate from support and return back to test either this trend line at 102 or the black trend line at 100, almost 103, before it collapses completely. But it's a good sign for Bitcoin that the DXY is weak. Now, the subject of today's video is that alarm bells that are ringing for Bitcoin. And what do I mean? I mean that the price action in this impulse up looks relatively very weak relative to the previous impulses, and we may have hit a local top and we are going down for a correction. In the previous first impulse up from December, from the beginning of this year, we made a 55% price increase in 53 days. Later, on the second impulse up, we made a 58% price increase in 35 days. Here we are on day 27, and at the moment all we have as price increase is, I think, 20, maximum 26%. So it doesn't look good. It looks as if momentum is going down. In addition, we have a weak bearish divergence between the second impulse and the third impulse, assuming that this was the high. Okay, you see, we have a high at April 14 of 30,000. How much? The 30,000, let's say 30,500. We have a high here of over 31K, and on the RSI we have a double top on the RSI, and a higher high on price is a weak bearish divergence. It's not a disaster, but it's something that you should be aware of. Also, the 33K level is a very strong resistance level, because this is the divide. I don't know if you saw my post about if Bitcoin is forming a cup and handle, yes or no. Okay, but if you haven't, go over to TradingView and read it. But I just want to point out that during the bear market, we experienced a markdown phase, and it was stopped exactly at 33,000, and we had the first bear market rally or redistribution, however you want to call it. And so 33K is the division between a bullish market and a bearish market, and until Bitcoin gets above 33K and stays above 33K, the market is not bullish yet. And this is the invalidation. If Bitcoin breaches the 33K level and stays above the 33K level, we are all good. Everything is good. We are going higher and higher. But if Bitcoin isn't able to breach the 33K level, then I think that we are going down for a correction. Now, I see a lot of talk on Twitter about BlackRock and the BlackRock Bitcoin ETF and all these things. What do I tell you? Now, you must understand that BlackRock, they wrote the book about buy low and sell high, okay? They invented the concept of buy low and sell high. So if you are expecting BlackRock to get in and to pump the retail's bags, then I think that maybe you are a bit naive. Okay? Now, one more thing is that there is a lot of inefficiency in Bitcoin's move. There are a lot of liquidity pulls to the downside. For example, this is a liquidity pull. What it means that here we have only buyers, no sellers. Okay, and so we have a liquidity pool between 28,352 to 29,400. This is a liquidity pool that wasn't tapped. We have another liquidity pool between let's say 27,000 and 28,000. So there is a lot of liquidity to the downside. Also lower, we have a lot of liquidity. And usually the market makers, they don't like to leave these liquidity pools untapped. Why? Because whenever you open a position as a buyer, they have to become the seller, okay? And if you were the buyer down here, let's say at 27,000, you are in profit. But they are not. When you are in profit, the market maker is in a loss. Okay? So if you keep holding your position from 27,000, okay, to the up and up and up, then you are in a bigger and a bigger profit, but the market maker is in a loss. And the market maker doesn't, it's his business. He's here to make money. He's not here just to provide liquidity, to do a service, okay? So all these liquidity pools, the market makers, they love to come back and tap these liquidity pools to get you out of your positions before sending the price higher. And it's also something that you need to consider. Now, it's very simple to decide if we are bullish or bearish, okay? If we can get Bitcoin above the range high initially, okay? Above the range high. To test the range high as support and to continue above 33K and to make 33K the support level, then we are bullish. But as long as we are below the range high, we should be careful. Now, we are not bullish and we are not bearish. When will I say that we are bearish? First is if we close a daily candle below the range low. This is the first bullish sign, first bullish warning sign. The second bearish warning sign is if we get below the trend line. Okay? If we close a daily candle below the trend line, a breach of a diagonal trend line is a very serious warning sign. So if we get below the trend line on the daily, if we close below it, it's also a bearish sign. So we have a bullish and a bearish invalidation. The bullish invalidation is a close above the range high, test it as support, get above 33K, test it as support, then we go up the stairs and everything is fine. The bearish invalidation first is a daily close below the range low, and second is a daily close below the trend line. That's all I have for you for today. I thank you very much for taking the time to watch this video, and allow me to wish you well, to wish you all the best in your trading and in everything else that you do in life. And I wish to see you in the next video. Goodbye.